May I remind you that trading is risky and not suitable for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small. Please stay humble. Please focus on the long term and never, ever, 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 ever risk money you cannot afford to lose. It's amazing how this disclaimer is said at the start of every single video that Wayne and I do. And I wonder how often people actually listen to it. Especially the part about never risking money you cannot afford to lose. Good morning, everybody. Welcome to Monday, the 10th of October. QuantBox Daily in the house. Another week, another opportunity to become controlled, consistent, and confident in your trading with the help of QuantBox, an amazing global macroeconomic tool that basically gives you a quant-in-a-box. If you've realized that fundamentals are important to your trading, but you have struggled to, do the fundamental analysis, put all the details together, it's more than just looking at GDP data and looking at central bank rhetoric, okay? There's a lot more to it than just that. There's so much more to it, and QuantBox gives you all those tools. It's an amazing tool. I've been showcasing it since last week, and the beautiful thing is, it's not just some tool out there on the internet that you come across and go like, oh, I wonder if this works. It's backed by the GOAT, greatest of all time, Wayne McDonald, okay? So basically what you've got here is you've got a tool that gives you the experience Wayne's had not only in the market for the last, what is it now? Must be 27, 28, 29 years. I mean, the guy's been around forever. There's a guy who was around before charts were even a thing. All those learnings he's gone through. He was a CTA, commodity trading advisor, studied at Harvard. The guy knows his stuff, right? So when he backs a tool, you know the tool is good. So here we are. This is the tool. To those of you who haven't got it, you need to get it because it's absolutely incredible. I myself was not a fundamental trader. I've been trading for 7 years. Okay, the first 3 years I focused on fundamentals, and unfortunately, they say a little bit of knowledge is a dangerous thing. And so I was working really hard. I was looking at central bank rhetoric. I was looking at GDP data, breaking that down, right, into the economy, the consumer, the business sector, imports, exports, trade balance, the whole thing. Trying to put some CRT data into that. I didn't have retail sentiment because where do you get that from? And seasonality was really, really difficult to get hold of. You can go and Google seasonality, try and find seasonality for every single currency pair or asset class on this list. It's neatly tucked away right over here. Then you have to have your various sites on your news events. You got your sites on your COT data. Is it reliable? You know, it's insane to have all this information right here on a dashboard, as well as say hello to my little friend, daily charts, some technicals, right? Beautiful math behind these values. And the nice thing is that you don't have to worry about how it's calculated or putting it all together. Can you imagine working this out every single weekend, your spreadsheets, linking stuff through, using reliable websites, paying multiple subscriptions across multiple websites, and at the same time, not knowing, is the data reliable? And of course, this beautiful little summary over here, which just tells you exactly what's going on, all generated for you on the back end. I just absolutely love it. We saw it in action last week. Well, let's see it in action this week, right? So we got a couple of things. We're going to take a look at our fundamentals first through our dollar pairs. We can see euro dollar still a strong sell. Technicals aren't looking incredibly bearish though, right? Looking kind of like we're going to sort of consolidate here. We'll pay attention to that. Pound dollar, also a strong sell. Also looking kind of flat on the technical side. Okay. You can see we got some data coming up today. Let's go back to the euro dollar for a second. Hold on one second. Un momento. So you can see here, 10th of October. That's today, friends. We got some European data coming out today. 1 to 5 of 121. My goodness. Isn't that cool? One of the things that we're going to be implementing as we move this into a different app is an ability to look at past data. Okay, so you can go back and look at past data from last week, last month, last year, and then verify, and then sort of compare that against technicals. Because the big question you have to ask is, how often do fundamentals change before technicals? How often do technicals lead fundamentals? And technicals don't lead fundamentals, but how often does the market have a sense that fundamentals are about to change? Technicals then line up, and then the fundamental data comes through, right? How often can you look at the chart and say, oh, I know that currently it says strong sell, but what if the chart says bullish? Or do we have to go into a neutral territory first? These are things that we would like to implement in the next version. But right now, what you've got is just absolutely brilliant, right? You can see retail sentiment, 68% long, 32% short, and yet we've got a very strong sell. What are retail traders doing? Okay, so got some news coming out of Europe today. Okay. All low impact. Let's have a look and see. Low impact, low impact, low impact. Okay, cool. So our bias remains the same. Pound dollar, strong sell. Bias remains the same. Got some dates coming out today. Okay. Some medium and high. Well, today and tomorrow. Cool. USD CAD. USD CAD is a buy. Looking like we got some nice movement on USD CAD. Well, interestingly enough, Wayne did give caution to this last week, did say, look, euro dollar, pound dollar, looking interesting. Maybe you want to shift your focus towards the commodity currencies. We'll have to see. So we got a score of 5. Decent. Okay. Again, retail sentiment, 18% long, 82% short. Right? Interesting. So obviously these guys don't have this information. Isn't that cool? You do. Aussie USD is a sell, -5 is the score, looking like decent on the charts. And then Kiwi Dollar was neutral when I was looking at this yesterday. Have we changed anything? Neutral. So I'm just like, leave Kiwi Dollar alone. If I've got neutral, I'm like, let's let the market just work that out for a second. Okay. On our yen pairs, Aussie yen, we had some neutrality last week. Now we got yen. Well, I think we got Aussie yen on Friday was a sell. You can see there looking pretty decent. So we'll pay attention to yen pairs. CAD yen coming in with a neutral. We're going to leave that alone. Euro yen coming in with a neutral. We'll leave that alone. Pound yen coming in with a neutral. We'll leave that alone. And then Kiwi yen coming in with a neutral. We'll leave that alone. Okay. Something else we can also do this week. Let's take a look at our dashboard. Oh, look at this dashboard. So top sells, euro dollar, pound dollar, gold, Aussie USD, Aussie yen. Okay. So paying attention to those. Top buys, USO, US 10-year, T-notes, USD CAD, US Turkish lira, dollar Swissy. Okay. Interesting. Okay. So strongest trends, Aussie CAD, Aussie Swissy, Aussie yen. Aussie yen. We saw that one just now. Aussie Kiwi. Okay. You can check out some Aussies, some Swissies. Well, let's jump into it, shall we? So nothing really changing except for like the Kiwi dollar going into neutral. Otherwise, fundamentals remain the same across our dollar pairs. And then Aussie yen indicating strong bearishness. So now it's simple. You've got your bias. You are a burr. Okay. So where's your resistance? Well, on the daily time frame, it was last week. Monthly M3, confluence, the weekly targets. You saw it, you planned for it, you took it, you made the money. You're still in that trade, and you have no reason to believe that you're not going to go down to M1. You're paying attention to things as we go along. They could be ranging. You probably haven't moved your stop to break even just yet, because you don't want to have that situation where price comes back up, knocks you out, and then goes down, right? So just don't manage your trade out of fear. Manage them based on an opportunity to lock in profits or to lock in a stop, but not get knocked out. There's nothing worse than having the fear of like, oh no, I need to lock this in, and then suddenly you lock it in and price comes back up, knocks you out, and then goes down. Just realize that when you take a trade, you are budgeting for the risk of that trade, like a business, right? It's like, imagine having an outbound call center, and then you phone someone, and then based on how they answer the phone, you put the phone down. Like, oh, I know, I just figured that they're going to say no. Like, no, you have to ask them the question. You got to give them a pitch, right? You have to give them a chance. Selling and buying, there's an element of rejection in what you do. You have to have the chutzpah to take that on. So we can look at this 4-hour chart and we're like, okay, well, where's resistance? Well, I mean, I've got resistance over here. There's 21 EMA. I don't. Okay. So lower lows, lower highs, but it's fine. Like, I can verify lower time frames. All I care about is like, is it resistance? I'm not gonna be like all what I'm looking for, over judgmental in this time frame. If I see price at 21, lower time frame. If I see price at central, lower time frame. If I see price at the central, lower time frame. If I see price at weekly M3, lower time frame. Right now, I look at this and I say, okay, I'm a bear on the euro dollar. Where am I in terms of price? I'm not in a great position to sell at this present moment in time. Okay, my daily time frame is telling me that nothing has changed. I don't see anything. We didn't make a lower low on Friday. But maybe that's because trading halted before we could. But ultimately, I don't have any higher highs and higher lows. Okay, we got to see what happens today. I've got no higher highs and higher lows. I've got nothing that says there's no reversal patterns. Nothing says that this is long-term bullish yet technically. So I've got reason to go into my 4-hour and continue looking for resistance. And so I do. Well, at this present moment in time, am I at resistance? No, I'm not. I'm currently at a weekly M2. That is not a place where you want to sell. Okay. A lot of people do not translate real life situations into Forex. I think Forex exists in this parallel universe, which isn't controlled by the laws of nature. Forex is controlled by the laws of nature. For example, I was talking to a student the other day, and they were buying, I think it was, they were trading CAD yen. Okay, so they had CAD yen, and they had a beautiful trade open down here, stunning. Confluence, monthly M2, monthly. What was that? There was what was this line over here? It was a weekly M2, monthly M2, confluence. There's a whole bunch of beautiful things over here. And they bought down here, gorgeous trade. But then they bought over here as well. And I'm like, why are you buying at a profit-taking zone? Yeah, I know, but this might go up, etc. I said, hold on a second, whoa. If you were buying a house, would you buy the cheapest house in the most expensive area, which might be like a fixer-upper, a renovator's dream? Would you buy the most expensive house in the worst area, or would you buy the most expensive house in the good area? The obvious answer is the first one. I want to buy a house in a good area as cheap as possible, fix it up, and then sell it for a decent profit. So you want to buy low. Now the question is like, okay, so if you bought a house, let's say you bought a house like in a good area for a decent price. Now suddenly the house prices drop. Would you then sell that house? No, you're going to hold on to it because it's property. You can hold on to it for like 20 years. Unless something's changed in the area, like, I don't know, there's some really good reason to get out of that area. Different story. But ultimately, if nothing's changed, you've still got good schools, good churches, good whatever, you're in a good area, you have reason to believe that right now there might be a slight dip in the property prices because maybe they're building a new shopping center and there's lots of, I don't know what the reason is. It's like, okay, well, I see the property price dropping slightly right now, but ultimately in the long term, it's going to rise. So you wouldn't just dump it when prices are low. You would wait and you'd wait for price to be high. So you want to buy low, sell high. So then why in Forex do we buy low and buy high? You don't want to do that. You can see here, look at how price drops down. You want to buy low and get out when you're supposed to get out. Sell high and then do whatever. Now, of course, you want to make sure that that ties into fundamental analysis. Okay. And there's lots of speculation about fundamentals and what it could be. Just look at your QuantBox, man. Follow QuantBox. It's as easy as that, friends. Then all you got to do is just verify everything technically, and you're like aces. Okay. So right now, euro dollar. Am I in a position where I can sell this? No, I can't. Am I going to buy it? No, I'm not. Why? Because I'm a bear. Why am I a bear? Because I have data that shows me that the euro dollar is bearish. Why reasons? COT data, -1. Retail sentiment, -1. Seasonality, -1. Trade reading, -2. GDP growth, 1. Okay, fine. But inflation, -1. Unemployment, -1. Interest rates, -1. I ain't got no reason to be buying the euro dollar right now. Cool. That's as easy as that. Just accept the truth and be like, okay, cool. Where can I sell? Now, the problem is in this situation, people now suddenly go like, oh, but I need to make the money, man. I need to make the money. I've got to make the money. No. That's like, again, going back to the call center. You now have to phone people and sell them insurance. But you're so desperate to make money that you don't buy qualified leads. So now you're just phoning a whole bunch of people who can't afford the insurance or aren't currently living in their own house or owning their own car. So you're trying to sell insurance to people who cannot use it. You're wasting not only your time, but you're wasting company resources in terms of paying for those phone calls or having to hire staff to manage those call lists, having to hire staff to manage those staff. You know, like there's a whole bunch of costs that come from running that business. Why would you be so desperate as to say, well, it doesn't matter, we'll just phone everybody instead of having qualified, verified lists, phoning people that you know could say yes, are in need of the service. Now all you have to have is good staff that can have the conversation, present the opportunity, and close the deal. So in this situation over here, you're not suddenly going to go like, I'm a bear, but you know what? I'm going to buy it with the weekly M2. This is fundamentally bearish, my friends. Look for resistance. Are you at resistance right now? No, you're not. Identify resistance. Where you got resistance? You got resistance here, you got resistance here, you got resistance here, you got resistance here, 21 EMA. Just again, verify everything low time frame. Weekly central, monthly central, weekly M3, weekly R1, weekly M4, monthly M3, right? You got a whole bunch of resistance levels here. When price is at resistance, which is not right now, go to a lower time frame, verify bearishness. How do you do that? Well, has price closed at the top of a range, i.e. double top? Has price made a lower low, lower high? Is price coming over 21 EMA? However you verify that bearishness, you verify it once price is at resistance. Price ain't there yet. That's cool, which means that now you can say, okay, cool. I'll come back in 4 hours when this candle is closed, and then we can have a look and see where we are. In the meantime, thank you, euro dollar. I'll be back. Hashtag Terminator, right? Okay, here we go. Pound dollar. Am I a bull or a bear? I'm a bear. Why? Because fundamentally, CRT data -2, retail sentiment 0, seasonality -1, trend reading -1, GDP growth 1. Okay, fine. Inflation -1, unemployment -1, interest rates -1. I ain't got no business buying the pound dollar. Okay. Strong sell 6. Okay, cool. Does that mean that right now my chart is saying I'm in a great place to sell? No. Okay. But I'm certainly not long-term bullish yet, not technically or fundamentally. So all I got to do is be patient. Right? Put on the ghillie suits, lie in the bush, and wait for the prey. Well, you are the prey. Wait for the game, right? So you're looking at this and saying, okay, I'm a bear. I'm going to sell this. Yes, let's go. Rock and roll. Can I sell right now? No, I can't. Why? I'm not at resistance. Okay, where's resistance? Here. 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 And again, with 21.55, you got to be careful. You got to make sure that you are bearish when you sell there. Okay. But ultimately, if you see price closing at a level that you perceive to be resistance, go into a lower time frame, verify it. If it ain't bearish, you ain't going to get a set up lower time frame. Remember, this is strategy. Strategy is the fundamentals. It says I'm a bear. Strategy is the technicals. It says I'm at resistance. Tactics is confirming that resistance. How? A 5A cross. How? Price breaks support, support becomes resistance. How? Price closes at resistance. How? Double top. How? Price comes over 21. Whatever the case may be. You know how tactics work. Tactics isn't the difficult part. The difficult part is being true to your bias and knowing what you're looking for. Right now, you're saying, okay, I know this is bearish fundamentally. Oh my gosh, like strong sell, strong sell, strong sell. And you're on the chart, you're going like, yeah, but I can just buy this, right? No, you cannot. You are a bear. So right now, ain't nothing to do with pound dollar. So then leave it alone, right? Again, come back in 4 hours. Okay, so Kiwi dollar, we said we're not looking at because neutral on fundamentals. Dollar CAD, strong buy. Okay, cool. Daily time frame, not giving me any indication of this being bearish. I don't see any, like price comes down here, price comes up, doesn't come off the resistance. If anything, price breaks resistance, resistance becomes support. 21 EMA, above 55. Okay, cool. Am I in a great position to buy? No, I'm not. Should have bought down here if I was buying. Right now, not in a great position. Seems kind of high, right? Okay, cool. If I was looking at a 4-hour chart, am I in a great position to buy? Oh no. Weekly M3 above the central. This is bearish territory. Just because it's fundamentally bullish doesn't mean that you can buy at resistance. Bulls buy at support. Where's support? Central, M2. The 2155 doesn't look very appealing to me because this is currently sideways. Confluence, monthly, weekly S1, weekly M1. I got a whole bunch of support down here. Support over here, okay? Right now, not a great place to be buying. So I chill, I wait. Looks like today is going to be spent doing other things, right? Which is cool. Here's Aussie USD. Okay, so we got price coming down. Nothing on this time frame says bullish. Okay, well, that's great because my fundamental bias is bearish. I'm looking for resistance. Where's resistance? Well, I've got the roll reversal. I've got the roll reversals. I've got the 21. I got the central. I got the M3. Okay, am I in a place right now where I can sell? No. Do I have to wait for the pullback and give me an opportunity to sell a lower high? Yes. Okay, that ain't happening right now, so I'm going to leave that alone. Okay, you got to be disciplined, controlled if you want to be consistent. Aussie yen. Okay. So now on the daily, you can see we popped up. This is now sort of turning bearish. That's great. Currently, we said fundamentals. I got myself a bearish bias on the Aussie yen. Why? Score -3. Okay, fair enough. It's not like an amazing sell, but it's definitely not a buy and it's definitely not neutral, right? COT data 0. Retail sentiment -1. Seasonality 1. Okay, but maybe, like Wayne spoke about a few weeks ago in the swing trading session, normally, under normal conditions, we'd expect to start seeing yen weakness 3rd week August into September, heading up into December. But right now, we ain't facing normal conditions, right? So we're like, all right, well, seasonality says that normally yen weak, but maybe right now that's not the time for that to happen. Maybe that only happens in November or December. Nonetheless, trend reading -2, GDP growth 0, inflation -1, unemployment -1, interest rates 1. Okay. Fine. Total score -3. Oh yeah, baby. And that's why I love QuantBox, because you get all of this information, puts all of it together, and booyah, you get your bias, right? So easy. So right now, looking at this, saying, okay, am I at a place right now where I can sell? The answer is no. Looking at the 4-hour, where could I sell? Well, resistance, 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 resistance. Sorry, this is now, let's just look at the hold on a second. Let's get the right template on here. There we go. Okay, so I'm gonna wait for a pullback. You can see we're going down, 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 down. Wait for that pullback, right? Ain't nothing to do right now. Now, the rest of the yen pairs were all neutral. I'm not gonna look at them. What I could do is I could, sneaky, let's jump into an Aussie Swissy, shall we? Let's jump into an Aussie Swissy, Aussie Swissy, Aussie Swissy, Aussie Swissy. Okay, let's get our daily chart over here. Let me get my monthly pivots. This is going to be the H4 with the weekly pivots. I think I've got it. Just to make double check I got the right one with the confluence. And then H1 will be the daily pivots with the monthly and weekly confluence. Okay, cool. So look at this and say, yeah. Aussie Swissy, I remember this. It showed me and said this was a good sell. Okay. Oh, now it's neutral. Okay, that's interesting. All right, that's cool. So look at how neat that is. So on my dashboard, I've got, where did it go? Ah, there's been a change. Okay. So I've got top sells, euro dollar, pound dollar. We're waiting for those to pull back to resistance. Gold, we look at that in a moment. Aussie USD, Aussie yen, waiting for those to pull back to resistance. Okay, cool. So I've now got, I'm busy waiting. I'm waiting for price to pull back on these 4, right? Could I get a trade out of one of them? Yeah, sure. Why not? Let's wait and see. Gold. Let's put gold in here. Rather. Okay. So you can see, right? Beautiful MR1. Okay, cool. Coming down. Ooh. Okay. Looking for sells. Yeah. Looking for sells. Okay. Where's my resistance? Central. M3. M3. Resistance. Resistance. Again, like I don't like if I get the resistance level, I don't care. If even like if I see price closing a resistance, I don't need to worry about the H4 time frame. Being like, oh, but is that resistance? But what about this? But I just have to see resistance. Oh, price is at resistance. I'm a bear. Log into the lower time frame because you will see it. You look at M15, you say, okay, cool. Let's just say, for example, you were looking to buy for whatever reason. Let's say you're ignoring fundamentals. You're looking to buy at the central pivot point over here, right? You're like, oh, price at the central pivot point. Okay, what do you need? Well, 21 below the 55, that's not bullish. We're going to need some kind of like reversal pattern, high, high, higher, low. And you don't get it. So you wouldn't buy. Flip that around in terms of selling. You say, okay, so this is very, very bullish going in here. Okay, and let's say look at last week and say, okay, very, very bullish going in here. Very, very bullish. Oh, look, price comes down, breaks the 21.55, price comes back up. Booyah. Okay. And if that wasn't cool for you, you wanted to wait for price to come down and pull back up. Booyah. Resistance. Resistance. Price breaks support. Support becomes resistance. Oh, yeah. Look at that sell. Bingo. You're in, right? That's the verification of bearishness on a lower time frame. It's easy because what you know is like, I'm a bear. I'm in a place where I can sell. I've got confirmed bearishness lower time frame. Let's rock the bus, yo. Yo, I've been watching lots of every year. Like I watch Breaking Bad again every September, and I got Jesse on the mind, right? Yo, Mr. White, science, yo. All right, cool. So, yo, FX Bootcamp, Forex, yo. Okay, easy, guys, easy, easy, easy. But without bias, you're just like riding through the desert on a horse with no name. Felt good to be out of the rain. So, boom. What are you waiting for now? Right now, we're like, okay, what have I got now? What have I got now? What have I got now? All right, I'm a bear in gold. Okay, cool. Have I got resistance? No, look where price is. Okay, cool. But that's cool, though. You got a bias. Now, realize that if this is bearish, bears want to sell. How do bears want to sell? Bears want to sell at resistance. Are you at resistance right now? No, you're not. Where's resistance? There, 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 there. Okay? All those places. Where that trade we just confirmed right now was over here. So last week, you were like, oh, snap. Price is over here. 5 o'clock candle, 5 a.m. candle. You verify that lower time frame. Boom, boom. You're in, right? Cool. Totes. Totes. Could have been this one over here as well, right? If you think if you are a bear and you think you got resistance, go lower time frame. Verify the trade. Verify the trade. Verify the trade. Have good tactics that you can use to verify bearishness, and you are sorted. So what I like about today, guys, is we are totally prepared. We got our biases. We're just waiting for price to come back up so we can sell at various resistance levels. And right now, there are no trades that we can take at this present moment in time, based on everything I've shown you. But we can come back in 4 hours' time as we start setting things up for New York, which obviously is a bit later. But in 4 hours' time, we get to close the 4-hour candle. We say, okay, cool. Are we at resistance? No, we're not. Okay, cool. Let's wait for New York Stock Exchange. Are we at resistance? No, we're not. Okay, let's wait for Asia. Are we at resistance? And just like, sitting, waiting, ghillie suit on, scope lined up, gun in hand, spotter next to us. We are ready to take the shot as soon as we can verify the target. Okay? Patience, 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 patience. You got to know what to do and when to do it. So let's see how today develops. So tomorrow what we'll do, we'll come back, we'll have a look and see, have we pulled back to resistance? Are we into a situation where we can take some of these trades? And you just got to be patient, friends. Do not trade out of position. Do not sell at support. And make sure that you follow your fundamental bias. This beautiful tool is like cheat codes, man. It's absolutely like cheat codes, but you have to be disciplined. You've got to be patient. You've got to be controlled. You've got to verify the trades, right? This data is useless if you cannot be a good technical analyst that can turn it into money. Okay? Because as much of a sell as euro dollar is right now, you sell that. And if you have no idea how to verify that sell or to sell at resistance, or to manage your trade properly. Where do you put your stop loss? Where do you put your take profit? If you haven't got that stuff under control, then it doesn't matter what this says over here, you're still going to lose money. Okay? Be disciplined, be patient, have control. That'll give you consistency, and that will give you confidence. I look forward to seeing you guys tomorrow. Hope you have an amazing day. And remember, today's an opportunity for you to behave in line with the trader that you should be. What would Wayne do?